Good morning, everybody. Welcome to the Ankerstar Wealth Morning Show. It's Thursday morning. We have a great show for you. Finally got a little bit of green in the market if it holds, right? So Mike's going to talk. I'm going to start us off talking about venture capital investing. We do offer that. We have a channel for that with Ankerstar Wealth. I'm going to peel that back a little bit, and also I'll be in Washington, D.C. tonight with Irene at a dinner hosted by Moonshots Capital, which is the local firm that we have VC investing with. So I'll kick us off with venture capital, the risk, and show you the company that we use, and then you can make your own decision. Then I'm going to hand it over to Mike. He's going to talk about one of our top 3 to 4 holdings that keep switching with Google, but that's Amazon. Had earnings the other day. He's going to peel back about what that means for the company and what we can expect going forward. We also had Chairman Powell yesterday. We had a Fed meeting. It wasn't exactly a nothing burger, right? Because even though they didn't move rates, they did say a lot of stuff that is moving the market and helping us forecast, which is very important for what folks do in Mike and I's position. And lastly, we're going to close with, our fave, it's come under a little bit of pressure lately, and that's Apple. So they have their earnings tonight. Mike's just going to give a quick preview of that. But let's go ahead and start with venture capital. So when you think of, this is the Moonshots Capital. This is who we use. So conceptually, just think for a second. You think, okay, you're a teenager and you get a job and you're like, my parents say I should save, $50 a month. So you put it in the market. And if you don't know anything else, you buy the SPY and go away, right? So, you just get started, right? And then as you go through the course of your life, you kind of cut your teeth and you build out to where maybe you started in mutual funds. Now you're in individual stocks and bonds. You're taking a little more aggressive approach, a little more active approach into your investing. And then when you start hitting that 7-digit level where you get become, an accredited investor, that now opens you for different options. And one of those options is private equity. We use a lot of Blackstone stuff. They're the best out there. We have private credit offerings. We have a real estate offering. And then the continuing further out on the spectrum of, I would say, interesting, but also increasing risk is out in the venture capital space. So when you think of risk spectrum, you're way off to the super aggressive side, right? In-house at Ankerstar Wealth, we do have a couple very focused, highly aggressive models. We have an Ego 5, Ego 10. Those are our exponential growth opportunities. We can't necessarily promise anything. And I didn't give our disclaimer, so I better disclaim that, right? This is a financial education presentation. You have to do your own due diligence for acting upon anything you hear in this, especially what I just said. And if you want more information, it's available at AnkerstarWealth.com. The opinions expressed today are Mike and mine alone. So we have an option but when we talk about our Ego 10 and Ego 5, we're picking public companies. Ticker symbols we can buy. Venture capital is now one layer earlier than that when, as you see here, seed stage venture capital. So before these companies go public. So it's super interesting. Every time I talk to these guys, I don't talk, I listen, because they know, I know a lot, but they know way much more, especially when you get into these early stage sort of things. They invest in extraordinary leadership, and that's important. What I'm going to tonight is a leadership conference where they invite their team, which is Moonshots Capital, which is a pretty small team, 6-7 people, about the same size we are. Assets under management, they have a couple million, so they're a little bigger than twice what we are. But they invite all the CEOs of the companies. And you sit there and they invite their investors. And, not all the investors go, but certainly the investors that have the time and energy to go can sit there with the CEOs and talk about these companies. So when you think, okay, what are you even talking about? It is veteran focused. The 2 folks that started this are both Army West Point grads. One of them is Kelly Purdue, who won The Apprentice Season 2. So, a fairly famous name out there. You can see here, sir, total AUM. I don't know, anybody heard of Slack? Raise your hand. Yeah, okay. I saw some hands go up out there in our massive listening audience. That's right, Slack. Yeah, they've already exited. They were acquired by Salesforce. Oh, maybe somebody in the room's heard of LinkedIn, bought by Microsoft. So, you can go across here and you're like, I've heard these names. I don't know about Bidium, but the other ones I have heard of. How about Cart.com? Obviously, that's online shopping. Carta, that's, you think of, I think you can, if I do some magic here, it pops open. There you go. Cap tables, manage alternative investments. I have some stuff with Carta as well. Picasso, part ownership of real estate. So if you want to real estate invest, but you don't want to buy the whole house, you can buy, a quarter of the house. ID Me, you may have heard of that. The IRS is actually using ID Me, and Blake Hall, the founder, former Army founder of ID Me, is actually one of our speakers tonight and tomorrow as well. Red 6, if you're in the Air Force, you know about Red 6, Daniel Robinson and his crew, superstar cast. A lot of them are former fighter pilots that I know. He happens to be British. Never flew with them, but I flew with some of the other guys that are on their C-suite. Gretel AI, you got AI with fake data sets being able to get in there and actually manipulate your system without using real data, which is a privacy concern. Right? All these sound like, yes, they're all going to win. They're all going to go to the moon. They're all going to get acquired by these names up here. Oh, not true. They won't. There's more in here. See full portfolio. There's lots of names in here. Some will not make it. Right? But that's the nature of when you think of, okay, if I'm dealing with high risk assets like venture capital, private equity, you package it into funds and they offer a fund. So you're not exposed to just one name, you get all of the names or a subset of the names, depending on the capital requirements. So super interesting. I love every time I go to these. Here's the summit that we're going to. There's a dinner tonight at the top of the town. Again, overlooking DC, and then our speaker lineup tomorrow again. So retired 4-star in here, and some other folks. There's your fireside chat. Here's the restaurant with some pretty cool views of Washington. But the last one I had here in Austin, I will say, it's like, all right, Daniel Robinson, the CEO of Red 6, fellow fighter pilot, Bond is his call sign. He was our speaker. And then the other speaker they brought in was Texas head coach Steve Sarkisian. So literally you're sitting in a room with 50 to 60 people listening to some superstars of the world talk about leadership and how to make a difference. So when Craig, who I liaise with, it's Craig and Kelly are the co-founders. Craig is responsible, at least as far as I understand it, for making the decision on what goes. He leads a board, but he's the leader of that board, much like Mike does our investing advisory board, but kind of really bringing those deals in and really, trying to figure it out. And he says it's more important to him. I mean, the underlying idea has that basis, but the leader has to have the ability to not just be a tech person, but also be able to lead their company to where now they're going to get bought and articulate what they do, that sort of thing. So really leadership focused. Looking forward to hearing those guys tonight. And Irene's going with me, so I get to take my wife on a date in Washington, D.C., and we'll be back home tomorrow. All right, I will stop talking. Let's go from venture capital over to Mike and tell us about what happened with Amazon.
Yes. So Amazon is one of those companies that when I went to look at the ticker symbol, I typed Amazon.com and I was going into the shopping portfolio. That's how frequent I use Amazon. I'm not a shopper, but I love Amazon shopping. So that's probably the only one, maybe Google as well. But great news came out a couple days ago. Earnings per share, 98 cents per share, beat 83 cents, which was the estimate. Overall, as far as the $143 billion in sales, which was, just $1 billion higher than they expected, so, and then even some of their diversification, beyond just, what we buy as far as Amazon Web Services also generated 16% beat. So overall, the company, how are they doing? Because that's what you really, really care about is like, what's the stock doing now? And this is just a 1-month graph. So you can kind of see it been down a little bit, bouncing around, but in the last, 3 days, it's up. So that's great news. Definitely included in many of our models. So I imagine if you're listening to this, you may have a direct share in Amazon. And if not, you may have it through our JTech, our tech leaders. So you definitely have some interest in this, and you're probably a customer already.
All right.
So the Fed, and one thing in this business, it feels like there is no day there's not news. There's always something going on. There's always somebody's earnings, somebody doing something. Powell speaking, it feels like every third day. And even though he did not move the rates for the third, fourth month in a row, which seems like that would be no news, but there is news. A couple things. One is they said, very, very unlikely interest rates to go up. So I read several things that said he didn't quite take it fully off the table, but he kind of took it off the table. And I bet you a lot of people that were expecting 6 rate cuts this year weren't even thinking there was an option that it could go up. So now they can be relieved of that, and so can we. That is a relief, because we don't want the interest rates to go up. What happens when those interest rates go up? There's less cash, or the cash that's out there is more expensive to borrow. Smaller companies like those ones that Steve just covered in Moonshots, it's harder to get money. It costs more. Big companies, Apple, Amazon, Berkshire Hathaway, Coca-Cola, they got lots of cash anyways. They're not too concerned about it. So that's one piece of good news. Another thing that I was reading about that Powell said is that they would be issuing less bonds. So when they issue a bond, let's say they issue a bond for $50 million, $50 million of cash comes to the Fed and sits on their books. That means there's $50 million less that could go into the market. But of course, we're talking on a scale of billions. So by issuing less bonds, they are loosening the money supply somewhat. So that's another tool that they have in their belt. One thing I did find out and pull this up is it's argued in history there's been 2 major mistakes the Fed has made. Now, of course, these are all many years ago. One was in the 1930s, allowing the bank system to fail. And in my studies, they tightened the money supply, which means they issued bonds, took cash out, and the bank, none of us were around. We know the Great Depression was really bad. Stock markets went down 90%. We don't want to have mistakes like that. But the other one is in the 1970s, and this is much more relevant to us, and maybe some people do remember this. But inflation was picking up in the 70s, and the Fed tightened the money supply like they should, but they backed off prematurely. And then what happened is inflation really took off. So that's the kind of situation that we're in right now. We've had inflation, the Fed's tightened, things are inflation's not fully under control yet. We don't want the Fed to back off prematurely and replicate this problem. We don't want to have interest rates on houses. You think 7% is expensive now, 18% is a lot more. The discount rate now, the Fed 5.25, I think they said it peaked back in the 1980s at 22.36%. That's a lot. So we don't want that. And that will absolutely stall the housing market, everything. So we're glad the Fed's doing what they're doing. We'll keep it up. I did see other things that said Powell's not going to adjust based on the presidential cycle. Guess what? Presidents, incumbent presidents would love for the economy to be just humming along going into the election, and obviously vice versa for the challenger. So, but the Fed is expected to run independent. So yay, keep doing that. It doesn't matter who's president. We don't, in the future, we don't care who's president. We want the Fed to maintain that independence. So last but not least, for the other thing I always click on that Apple phone. So later today, Apple earnings. So here's a quick preview. Let's see. They're expected to come out with revenue of $90 billion. These would be numbers you might see right away. Earnings per share of $1.50. Revenue last year was $94 billion, so they're actually projecting a little bit lower. All it has to do with the timing of the iPhone cycle. One of the more important numbers to us, though, would be gross margin. So if a company starts to reduce that gross margin, that means they're trading sales for profit, and that's probably the most important number for me to look at real quick. You see companies do that where they're making a lot of money on every dollar they sell, and they start reducing that, and then they become more like a commodity. And we don't want Apple iPhones to ever become a commodity, or this stock is not worth holding. Just a quick glance, it's up $1 or 1.54% today. People just trading it around. So as Steve said, it's been down this year. Hey, we're expecting and hoping for a bounce today. So that's all I've got. I'm sure we will be reporting out soon on Apple.
Yes, it always gets our attention because it moves the needle for sure. And so, yeah, we talked Apple, Amazon, venture capital, but I tell you, the Fed stuff, oh, yeah, they are independent. You know, that almost gets air quotes, right? Because if you remember when Trump took office early on, the first time around, he kind of went right after the Fed and was trying to tell them what to do and stuff. And it's like, yeah, you're not supposed to do that. Like many things he did, they're like, yeah, you're not supposed to do that. So he backed off. But yeah, that if somebody wants homework and get a gold star, so the whole bond buying and issue, quantitative, all of that is called yield curve control. I went to 3 different sources last night and read it. I even went on Twitter. I found one guy that said, explain yield curve control to a 5th grader. He put that into his like AI. So I read the 5th grade version of it, and then my head got to start hurting and I quit. So if somebody wants to fully explain yield curve control and exactly how this affects, it's their second lever, right? They control short term here and then have their yield curve control. It's like, okay, I'll have to wait for a fresh brain to figure all that out. So, all right, that's all we have for you today. We will be back to probably not tomorrow. I'll be at the leadership conference all day tomorrow and fly back on tomorrow afternoon. But with that, we will be back with you guys Monday, unless, of course, something so exciting comes up we need to address it tomorrow, like Apple up 20%. Okay, maybe not going to be up 20. If it's down 20%, we're probably talking to you too. So, all right, guys, hang in there, and we will be back with you next time. Have a good one. Bye.